Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. Folks, you can probably tell I am not recording from my home studio today. I'm at a hotel in the lobby, actually. I'm on vacation with the family, but there's some big updates that you need to know about that's happening in the crypto markets. I wanted to get you guys the latest and greatest, of course. And first is some comments from Ray Dalio. And many of you know he's the most successful, he ran the most successful hedge fund. He's a macro investor. He's been putting out a lot of alpha over the past couple of years. And, you know, I always watch his interviews. He's very thoughtful. He understands the cycle of liquidity, human behavior, psychology, and all those things. So the headline is Ray Dalio warns the Fed is stimulating the economy into a bubble. So we know the Fed, they're ramping down quantitative tightening. Quantitative tightening is going to end December 1st. And after that, they're going to go into full money printing with quantitative easing. We know when they do these activities like quantitative easing, that drives asset prices higher. Now, Ray is concerned because with the economy not in a great place and the Fed doing these actions, it's going to inflate the asset bubble even greater. And this is why I've been saying I don't believe the bull market's over, even though these are red flags. This is why we want to make sure we are identifying that top zone and taking profits at a certain point before there's a peak to the market. So here's what Ray had to say. The U.S. Federal Reserve's decision to ease monetary policy is inflating an economic bubble that could drive up prices of hard assets, but also marks the final phase of a 75-year economic cycle. Typically, the Federal Reserve eases interest rates when economic activity is stagnating or declining, asset prices are falling, unemployment is high, and credit dries up, as seen during the Great Depression of the 1930s or the 2008 financial crisis. So Ray published this article on X. However, the Fed is now easing monetary policy at a time of low unemployment, economic growth, and rising asset prices, Dalio wrote, which is typical of late-stage economies saddled with too much debt. So I think we all know these central banks, they're all stuck in between a rock and a hard place because the fiat system requires that you have to continue to print and debase the currency, but that causes a lot of economic problems with inflation and higher cost of services and goods, of course, but it also inflates asset prices. So this is where you have to diversify into assets, but it creates these bubbles. And we know when these bubbles get too big, as we've seen with the dot-com bubble, the real estate bubble, and one could argue this one could be kind of a 1929-ish. I'm not saying it's going to be exactly like 1929. You know, you could see a big crash. But what we've seen since 2008, their solution is to keep printing. So we know they're not going to let it get to a 1929 level because all the boomers, everybody's retirements are in, these assets, stocks, real estate, and much more. So they can't let the collateral, the assets go to zero because that will collapse the economy if you understand how this all works. So I think Ray's signal here shows higher asset prices are coming, but it comes with a warning that there could be a big crash at some point, and it's going to be pretty nasty. So this is where I don't believe the bull market's over. I believe global liquidity is still a leading indicator. It continues to rise. I think the Fed will go back to quantitative easing, and we'll see. Maybe at the time they are ready to go into quantitative easing, it will be a buy the rumor, sell the news event with a massive crash. So these are the things to think about, but it's also a macro factor that's showing it's not over as yet. So it's important to think about, what may be ahead and think about this from a macro perspective. Here's a chart that Crypto Currently, a great analyst, shared. He says Bitcoin can be quite volatile in the short term, but the long-term trajectory remains clear. Global liquidity has to rise or the entire system collapses. So again, if you follow global liquidity, which is leading all the asset prices, whether it be the stock market, real estate, crypto, precious metals as well, and we saw gold do a parabolic rally, it topped out, and I believe there's going to be a rotation into stocks and crypto. There is a bit of a lag, but I think that's on the horizon. But global liquidity is the leading indicator. So Crypto currently says global liquidity has to rise or the entire system collapses. The Fed has to restart QE. The US government has to reopen. And remember, in order for the government to reopen, they have to fund it, right? So this is why every time we've seen these situations, it's not the end of the world. It's annoying. It's a lot of people are out of work, who work for the government. It slows the government, being able to get things done. But when they reopen, it's this macro sigh of relief, plus the liquidity that follows it. So again, I still think we got upside here. Here's an interesting take from JP Morgan, and it's not wrong. I'm not taking their information without doing my own research, but I think it's right. JP Morgan says Bitcoin looks cheap next to gold, points to 170K fair value. So that's the fair value of Bitcoin. Higher than that, it would be over fair value, and in the expensive area where, that could signal a top. We'll have to wait and see how things play out. Obviously, we've been dealing with a lot of volatility, but we've been in extreme fear sentiment and Bitcoin in the oversold zone. So let's be patient and see. We may not get that epic rally towards the end of the year. It may come in Q1, but look, we don't have a crystal ball, but we'll have to wait and see. We are following the macro signals to see how this all plays out. But the thesis is still in place here. Now, quick word from our sponsor, folks, and that is Trezor. Trezor makes beautiful hardware wallets that make it easy for you to safely store your crypto assets. I've been a user of the Trezor Safe 5 specifically, and I just got the new Trezor Safe 7. This is a new device they launched recently. I was at the event in Prague, and it's beautiful. It's quantum proof, water resistant, has a brand new screen, brand new aluminum hardware or structure around it, lots of capabilities, and lots of new security features. And they support all the top coins, of course, including Bitcoin, Solana, XRP, Ethereum, and many more. So this is my go-to hardware wallet. It's where I store majority of my crypto assets. And folks, you can use my code ThinkingCrypto to get 5% off if you purchase a device. And they also have a hand-holding service. So let's say you buy a device and you want to talk to a Trezor rep to help you get started, to walk you through the process. That service is available. And don't worry, they don't ask for your private keys. So it's a great service. And they also have a great new software suite that helps you to manage all these assets where you can buy and sell within that software. So check out Trezor, guys. Once again, I'm a user, and they're the ones that started the hardware wallets. They created the seed phrase setup. So they've been at this since 2013, and their hardware wallets are open source. So the code is out there for anybody to view. That's how much they trust what they've built here. So anybody can review that code and give feedback. And it's been tried and tested. So something to check out there. All right, let's move ahead. The banks don't want you to continue to earn yield on exchanges. They hate that you're earning, 5-6% or even 4%, than the BS, interest they give you in your savings account. So banks lobby U.S. Treasury for a blanket stablecoin yield ban, but Coinbase is pushing back. And it's not just Coinbase, other firms as well. We know Uphold, one of my sponsors, they also offer a yield on stablecoin. The banks hate that. And we know the banks are taking a lot of that yield they earn on treasuries and so forth. That's why they make record profits, but they give you peanuts, right? They give you the breadcrumbs. But we have options now. I personally stake USDC, RLUSD, and others where I earn those passive rewards. Now, is it all my cash? Of course not, right? But again, these banks are not giving you anything, and they hate the fact that there's competition here. So this is great to see that the disruption's happening. It kind of sucks that they're fighting back, but they're losing. The Genius Act has been passed, and it's being put into place. Here, Circle weighs in on the Genius Act implementation. We know Circle is the second largest stablecoin issuer with USDC, following Tether, of course, with USDT. So they're advocating for a level playing field among banks, non-banks, and stablecoin issuers as the U.S. Treasury Department considers implementing the Genius Act following its signing into law in July. So we'll see, are these banks able to lobby? I don't think so. Donald Trump has made it clear, he wants the United States to be the crypto capital of the world, and stablecoins are going to play a big part in that. So let's see what happens, guys. These banks are not giving up, but they've already lost I think the war. They're fighting these little battles, but they've lost the whole thing, right? As soon as these bills made it through. And remember, these are the guys that were lobbying Elizabeth Warren and Gary Gensler over the years to try to stop Coinbase, stop the other exchanges and crypto projects. Now, look at this news. This is very bullish. UN agency to launch blockchain education advisory programs for governments. So we are seeing a global movement of educating people about crypto, blockchain tech, and much more. It is coming from the IMF. It is coming from the BIS, the Bank of International Settlements. It is coming from massive associations. It's incredible. And here you got the United States. So if you think blockchain and crypto is going away, wake up. It's not. So the United Nations Development Program plans to launch 2 initiatives aimed at helping countries adopt blockchain technology. Let me read the latter half of that sentence again. Aimed at helping countries adopt blockchain technology. This is the UN we're talking about here. Do you see where we're headed, right? So Robert Pasico, the leader of the UNDP's financial technology team, AltFin Lab, told Cointelegraph at the UN city offices in Copenhagen, Denmark, that the organization plans to launch a blockchain education program for government officials alongside a blockchain advisory body. Essentially, all the countries, all the government officials get up to speed, understand this technology. As I've been telling you all, blockchain rails will power the markets, the economies, and governments, folks. That's where we're headed. So the initiative builds on the UNDP's existing blockchain academy for UN staff, now aimed at helping governments implement blockchain in real-world applications. Pasico said that in a few weeks, the new academy will begin operations and select 4 governments to work with. He expects formal approval for the initiative within 1 to 2 weeks. He says training is just part of it, Pasico said, noting that the organization will also help initiatives move further through project development. He said that research conducted by the UNDP found 300 potential use cases for governments willing to adopt blockchain technology. See why I'm saying this is bullish news. If you got the governments on board, you have the banking, financial institutions on board, what do you think is going to happen here, folks, right? There's more higher prices coming. We just got to stomach through the volatility and the cyclicality of liquidity and all these things. This is why I keep preaching macro, zoom out. When in doubt, zoom out. Look at this. Robot Ventures leads $5.2 million seed round for Sprinter, a solving as a service startup founded by Ethereum OGs. So this is interesting. Sprinter, a cross-chain solving as a service infrastructure startup, raised $5.2 million in a round led by Robot Ventures alongside several notable angels. The protocol is looking to improve transaction execution performance in part by providing solvers and market makers with collateral-free credit. So the innovation continues, the investments in different companies continues, folks, and these are signs of a growing asset class and industry. So these are things I want to look at. I also want to look at where these funds are putting their money as it relates to token projects. Is there a token? Because that could be a great way to get an idea of what may happen to that token as more liquidity is added behind it, right? We've seen VCs put a lot of money behind certain projects and they do well. Now, that's not the only factor. There needs to be utility adoption, people building on the chain, daily active users, monthly active users, revenue off of fees and things like that. So it's important to look at what the hedge funds and the VCs are doing and where they're putting their capital. Let's move ahead. We got Google Finance to roll out Polymarket and Kalshi prediction markets data in search results. Boy, is this validation of prediction markets, right? And we know prediction markets are blockchain powered, and it's disrupting the whole survey model that we've seen out there for politics and other things. It's incredible what's happening, and Google recognizes that, and now they're integrating it into search. That's a big vote of confidence there. So Polymarket's volume, active traders, and new markets hit all-time highs in October as prediction markets continue to gain steam. And even with some of the elections that happened recently, the prediction markets got it right again. They got it right in the 2024 elections. They got it right just recently with some of these, state, local type of elections. So pretty incredible stuff here. Now, it wouldn't surprise me if Google launched their own prediction market eventually, or they went and bought one of these guys, Polymarket or Kalshi, right? We've seen Google's MO. If they see something that, they can get more participants and users in their network, they will go and make that acquisition. They did it with YouTube. They did it with other projects out there. Many of these things they didn't build homegrown, so they would go out and make the acquisition, and that would expand their user base and their whole network, and that's why they're the giant that they are. So it wouldn't surprise me if they went and acquired a prediction market. It just makes sense because there's so much data. These prediction markets don't just cover finance, they cover politics, they cover pop culture. I mean, there are markets for like just some of the dumbest things sometimes, but look, that's human behavior on online, right? People are gambling and creating markets. So there's a lot of data there, and we see this data has been pretty accurate, fairly accurate. I wouldn't say 100%, but there's a lot of value here. So anyway, I think Google could certainly go out and acquire one of these companies eventually, or build their own. I don't know. They already have the network of users, so it would be easy to port those people over to their own prediction market. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. I apologize if the audio is not great. As mentioned, I'm recording from a hotel lobby, but wanted to bring you guys the latest and greatest as far as what's happening in the market. And as it relates to price, there's nothing to talk about right now. It's just chop. We got to wait till Bitcoin finds that bottom and then starts moving, and then we can really look at things and where they're at. But right now, Bitcoin's just doing its thing. There's no invalidation of the macro thesis. So just something to think about. Folks, be sure to subscribe to my free email newsletter. It's 100% free. Link will be in the description. Check out my book on Amazon and my course at mycryptocourse.com, a comprehensive course that teaches you everything about crypto. Thank you for tuning in. I appreciate you all, and I'll talk to you all later.